Good day, ADK and Financial Planning World Community. Dan Davis coming to you on Monday, November 14th from the St. Louis office. Very specific on the date because daily we're getting changing or updating midterm election news, which is our focus today. It's post-midterm election. We waited a week after the election specifically to let some time settle because we believed there would be much undecisiveness, and it is. I would say that's kind of the theme. It's clear that with results that were tallied over the weekend, that the Senate will maintain control by the Democrats. Everything I read says that the House is too close to call, but that the majority believe that it will have a slight control by the Republicans. So when you think about gridlock markets like that, that would be a gridlock position. We'll know more as the days and weeks come. Of those, of the House, there's 19 seats that are what we would classify as undecided. All out west other than two, Syracuse, New York, and northern Maine. 11 of the western undecideds are in California. Interesting to me as I look at the blue and red states, how many different houses or seats are red that are in a blue state and vice versa. But on top of the 11 in California, then have Colorado, Arizona, Oregon, and Alaska. The Alaska race looks pretty obvious, but too few votes counted. A lot of the election results, like we said, are just too close to count. And the market, when it woke up the next day, Wednesday, and knew that it was going to be undecided, didn't like it, drew back about 2%. The following day, Thursday, the news of inflation, the economic news, trumped the midterm election news, and it was so favorable that we saw the 15th best market day over the last 70 years. If you think of 70 years, that's a pretty long time, and I've never in my career even read about a day where something like the NASDAQ, for example, being up 7%. So clearly we're in a setting where economic news is in the short term more important than political news. I would say that is our perspective, is that as long as the election ends peacefully, regardless of the outcomes, that the economic news will trump that. The economic news is still a little bit short-lived, meaning that the good inflation news doesn't make a trend, but if the trend continues, then it appears that inflation will have peaked in the U.S., maybe not in places like Europe that have a pretty rough winter ahead of them. Our view is that the markets will continue to be volatile, but with an upward trend. We don't believe that that's a long-term trend. It's more of a short-term trend because our concerns around what we expect relative to highly probable recession sometime, call it mid-March to mid-June next year. If the recession happened today, it would be fairly mild because the consumer is fairly strong, but we don't know what kind of data will play out. If it does happen where the markets get that run up and we're expecting a recession, we will take some equity reduction within our portfolios, somewhere between sort of a risk neutral and a slight risk off. I'll keep you abreast of that because, as you know, investing involves a lot of risks. There's multiple scenarios that can play out, which could cause us to play the hand a little bit different. But as we approach Thanksgiving, I am often reminded of the things that I'm very thankful for. And I'm thankful for your relationship, the trust you place in us, and the business that you give us. It's heartwarming that many of you I've worked with for 3 decades, and the kind of things we talk about relative to important things in life are very meaningful to me. So signing off from St. Louis, thank you very much for your trust in your business. Have a great day and a wonderful upcoming Thanksgiving.